Okay, for more on this topic, Brad Hunter joins us, Chief Economist and National Director of Consulting at Metrostudy, joining us from Boynton Beach, Florida, which I'm going to next week, nearby there in Florida. Welcome to the show. Let's talk about this housing market. Some call it crazy, some call it a recovery, some call it unsustainable. All kinds of adjectives are being used. We saw pending home sales. They were up more than expected. So far, the data has been good, but they're also backward-looking data. How do you feel so far about this recovery?
There's been a total turnaround in the housing market in the last couple of years, and the data in the last few months has just emphasized that all the more. What we're seeing is that people are buying again. They're feeling more confident. I used to talk 2 years ago about the 4 Fs. These are the 4 things that were keeping people from buying homes: fear, financing, falling home prices, and finding a buyer for their other house. Falling home prices is a big turnaround factor. Now, with prices going up instead of down, people are no longer afraid of losing equity when they buy. And in fact, they're wanting to jump in just past the bottom and ride the next wave up.
Well, the fact that you're smiling is already a very bullish sign. Let me ask you about inventory. There's been complaining out there that buyers say, hey, wait a minute, I want to buy a house, but there's no houses to buy because the builders aren't building enough houses and there's not enough secondary houses to buy. Is inventory an issue?
Well, it's starting to get corrected. The builders are increasing their production. Right here in South Florida, as an example, our data show that construction is up 61% compared to a year ago. And that's a big increase. And a lot of it is happening right here in the Boynton Beach area. This is a very hot submarket in South Florida. There are builders that have had literally consumers camping out overnight in order to be the first ones able to buy homes and pick their lots. So it's really a really phenomenal turnaround in consumer attitudes.
The the other part, I don't want to be too much of a cheerleader here, because the increase in mortgage rates, which we talked about earlier, could also be an issue as well. I mean, is that potentially good news or bad news for the overall housing market?
Both. Initially, what happens is when interest rates start to go up, people say, oh, I'd better lock in now and make that move now instead of perhaps a year from now, which maybe was my initial plan. Rates are moving up, prices are moving up. It's creating a sense of urgency in the market, and that's causing more people to want to go out and buy a home today. But I would say that in the longer run, a year or two from now, we're going to start to see a negative effect from higher mortgage rates because of affordability. An increase from 3.5%, which we just left behind on a 30-year fixed mortgage, to 6%, represents a 34% increase in the monthly payment based on principal and interest, and that's a substantial change in.
I want to ask you something. I got in an argument with a lawyer about this, and I tried to convince each other whether it was good news or bad news. And here's my theory. You tell me if we're right. If mortgage rates go higher, people who currently own a home say, well, I just won't sell my house because I've got a great mortgage. Why would I give up that great mortgage? So that house does not get put onto the market. And because that house doesn't get put on the market, there's less inventory. And therefore, the lack of that one extra house of inventory makes up for that one person who might not buy a house because of the higher interest rates. Therefore, it doesn't really matter what the interest rate is because the two balance each other off. Are we wrong?
That argument actually carries weight. However, what's happening at the same time is that the builders are adding to the supply. Right now, the inventory of homes around the country, and we track 200 and some odd counties around the country every quarter. We know exactly how many units of inventory of built homes there are, and the inventory of new home supply has gone down by 75% since the peak a few years ago. And so that's driving the increase in home prices that's taking place. So we have all these things that are encouraging the builders to build more homes. Low inventory, rising prices, and growing demand. A lot of it, too, is that household formation rates were very, very low for the past few years. And
I have a question that everybody from the newsroom to the control room probably wants to know, and that is this one question. How long does this bull market last? Is it the next 2 years, or is it the next 15 years that we're going to have double-digit returns in the housing market?
I think what we're going to see is very substantial slowdown in the rate of home price escalations, especially for the new homes. New home prices are going up in some places, the really prime areas, 15%, sometimes 18, 19% on an annualized rate. That's going to slow down for sure. Probably in a year, that's going to slow down substantially. 2 years from now, whenever rates get up to the 6% range, we're going to see the rate of home price increase slow down. I don't think we're going to get to the point where home prices go down again, but I do think that there is going to be a leveling off. Case-Shiller numbers in the 12% range is probably going to come back down to more like 7 or 8%, and then back down to 5 and 6%.
All right. I wish we had more time. Brad Hunter, Chief Economist, National Director of Consulting at Metrostudy, joining us from Boynton Beach, Florida.